Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 spine ES-beam reversion systems with about 90% winning trades. By the way, we had a couple recent nice trades here close out. And of course, our amazing KISS systems, which honestly have been one of the most exciting things I've seen in my 25 years of doing technical analysis. Anyway, hope everyone had a nice weekend. This is our comprehensive weekend newsletter where we cover the major indexes, commodities, precious metals, crypto, you name it. These weekend newsletters tend to be quite comprehensive. So quite a bit here. Hope you don't have a short attention span. This is our backend recorder for our website, our subscription service for our website newsletters. I'm going to go ahead and get that recording started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. This is our comprehensive technical analysis review of the markets and trading systems, and it is Sunday, June 2nd, 2024. Newsletter is divided into 5 major sections here. If you happen to be new to Breakpoint Trades, these weekend newsletters especially tend to be very comprehensive. Again, not for the short attention span type folks. These weekend newsletters are very comprehensive, usually take anywhere from 40 minutes to close to an hour. Again, it's for folks who want to learn technical analysis, really want to dive into it. All right. So we've got a lot to cover here. And again, hope everyone had a nice weekend. For the week, except for the Russell 2000, which closed slightly positive, all the major indexes closed down. The Dow closed down about 1%, S&P down about 0.5%. The NASDAQ closed down 1.4%. Now, that said, out of the 21 market sectors we track, only 6 of those were down. So most of those were up. And as far as commodities, it was a down week for commodities with the DBC index down about 1%. Again, most commodities were down, from crude oil to some of the ags, copper, and some of the precious metals. Now, as far as the market, Friday was a wild day. The first half a day, the market sold off. The S&P was down about 30 points. Okay, but then the following half of the day, we had a very strong rally into the close. Momentum, short covering move. Again, the S&P was down 30 points the first half of Friday and ended up closing up 42 points. Okay, the Friday's late day move, it was clearly options, ODT options. They strongly affect the market. There was obviously short covering, and of course, perhaps end of the month. That said, right now with Friday's rally, I see 2 options, guys. All right. Again, there's always a couple options on the market, and I do have one that I'm favoring, and I'll discuss that in a minute. But so 2 options here. Number one, that pullback either completed that wave 4 off the highs that we've been showing, and that low is in, and we've started a wave 5 or again a new all-time highs. Or that rally could have been a bear trap. Short, again, that rally on Friday was seemingly a little bit artificial with the short covering ODT options in the month. And we closed up just below a supply zone. So it's still possible that we form a lower high, trick everyone, and then come back down again. There's actually an algorithm guy we follow who's been very good this year. Obviously, we have our own algorithms, but he called for about 150 S&P point pullback a couple weeks ago, and we talked about that. And we got that, as you know. Remember a couple weeks ago, week and a half ago, we were calling for at least 150 point pullback in the S&P. That played out. So hopefully you guys paid attention. You could have got out of some long positions and locked in some nice gains with our call. But he actually thinks we're going to form a lower high and come down pretty strongly. So just be aware of that. Again, I'll discuss those options. A lot of news items this week from Monday, ISM manufacturing, S&P global PMI, Tuesday, factory orders, JOLTS, jobs, Wednesday, MBA mortgage, ADP, ISM non-manufacturing, Friday initial jobless claims, Thursday, and Friday non-farm job payroll report and the unemployment reports. All right. We're also hoping to launch the next version of the KISS systems this week. I'm going to talk about that a little bit below here as well, but let's go and get started. So here's the two options, guys. And again, I'm going to discuss these charts when we get further in the newsletter, but these are the two options. All right. So here's the S&P on the left. So here's very simple. You've had a wave 1, 2, 3, and we completed a wave 4 pullback. You can see Friday's lows got near that 50-day moving average, that red moving average there. That's the 50-day. And we completed wave 4. We're going to go up to a new high in a wave 5. Again, definitely has that look to it. You can see the moving average ribbon, which is bullishly configured, and it's pinching. Usually those first pinches are pretty good buy opportunities. So again, that's definitely a very viable option. The other option here, which I'm showing you on this is a 2-hour time frame of the S&P. So first off, you can see we pulled back into this demand zone on Friday. We bounced right off of it. These supply and demand zones are awesome. It's something we've been doing all this year, and they're very good guides. Really amazing areas to take trades with tight stops. But you can see we bounced off that demand zone on Friday. We rallied up just shy of the 61.8 fib retracement from the highs. Under this option, option number 2, you would fail up around here, up around the supply zone, then come down and eventually take that last demand zone out and potential targets down in the low 5,000s. That's a very real possibility, guys, that Friday's move was a bear trap. Now, you got a supply zone up here. You also have that 78.6 fib at 53.10. So if price goes really above that, closes above that, then I think this is negated or mostly negated. But right now, this is still a viable option. And the good thing is we should know early this week, Monday or Tuesday, if this option is going to play out or this or the more bullish option. All right, so that's the two options we're favoring. The algorithm that's been pretty good favors this option here to go down. So we'll see if he's right or not. Again, on the markets, it's not about knowing 100% what's going to happen. It's about seeing important areas like these supply zones, demand zones, where you can place tight, trades with tight stops. Okay, if you're long, for example, you could just simply put a stop below Friday's lows. Pretty easy, right? If you favor the long option. If you're worried about this option, this may be an area to lock in some longs or take a low risk short, and then you cover it if price goes above that 53.10. Anyway, let's see which one of these options play out. Let's go ahead and move on. So let's talk about the KISS systems, guys. As you know, these have been live for about 1.5 years on the website, and quite frankly, they've been pretty awesome. The KISS system, if you don't know, it's a universal type system that I developed a couple of years ago. And surprisingly, and the reason I call it a universal system is because it's profitable on most instruments without back testing, which is something I've never seen with a system before. Most systems you have to back test and stuff like that. All right. So we're hoping to launch the next phase of this. I know it's seemingly been forever, but there's a lot of technical complexity that I'm not going to go into here. I may do it on a webinar or something like that, but it's been very difficult to get all this where it's ready to launch. But I think hopefully this week we're able to get this launched. Those of you who've been using it, you have the daily and weekly. We're going to add that section with the higher performance stuff. It's smaller time frames, SMS, text messaging, stuff like that. And been pretty good. But you can see, here on this table, you can see some of these nice gains. Bootstrap, again, these are all real trades, guys, that have been on the system. Bootstrap up 34%. Bunch of these nice gains. You can see the last trades too. That's something we're adding to the tables. Again, not everything's a winner. You can see a couple losers here, but there's pretty awesome gains here. CLS, for example, is up 13%. It went long on 5.8. For the previous trade, it made 60%. Just like Dell here, it's up 11.65%. It closed out on Friday. That's what the red means. And the previous trade was 23.3%. So 2 good trades back to back. You can see some of these up here. Again, hoping to launch this week. And again, if you haven't been using these guys, you're missing out. Still, not everyone on the website has been using them. You can set favorites. It'll automatically send you email notifications for your favorites, when to enter the trades, where to put your stops, when to exit. So those of you who need your handheld, you want to be told what to do, because you're maybe not confident enough yet to make your own trade decisions. It's what these systems do. They're full systems. Yes, not every trade is going to be a winning trade, but the nice thing about these, because of the stop technology, your risk is defined. Next. Image number 4. So here's a great example of the KISS system. Again, it's an idealized example, but we have had a lot of trades like this. So this is Wingstop. So on the KISS system, again, this is a live trade. On the KISS tables, this went long. It's not a back-tested result. We've had the KISS systems live on the website for a year and a half. So here on Wingstop, the system went long on September 11th, 2023, right there. Okay. And you could see the initial stop around 155 that it placed, and you could see all those smart trailing stops. It kept them wide enough to avoid being hit on noise. In fact, it raised its stop an amazing 32 times. So someone who followed this trade would have entered here on September 11th, and the website each time would have told them to raise their stop, and it would have given it each stop each time. So you'd have been notified 32 times to raise your stop. You'd have been notified on the entry. And that trade is up 134.6% with a stop around 357. Okay. Great example of the KISS system. KISS systems, again, your risk is defined. They keep you in a long trend with that protection, kind of like insurance for your stock portfolio versus buy and hold and not having a plan at all. Next, talking about some other KISS systems. So here's the indexes that we show on the website each day. So here's the S&P daily KISS system. Again, it's done a very good job. Last year it went long in March. Great trade. Had a little whipsaw trade there in September, which is fine. Small stop, right? Small losing trade there. That's what the stop technology is for. Then it went long, just a couple bars off the lows in late October. Caught that low, rode it all the way until early April. It went long in early May, and you can see that it's raised its stop 3 times. Now, that pullback on Friday did not hit the stop, which is 51.69, 51.70. So that's where the stop is if you're following this. You can see the moving average ribbon is pinching on a bullish configuration. Next. Number 6, here's the Q's KISS system. Now, this one, again, pretty similar trades to the S&P. This one actually hit its smart trailing stop on Friday. You can obviously price bounced off of it. That ended up being the low of the day, but this exited. Now, the QQQ KISS on the website has not exited. Let me show you that. Sorry about that, guys. We got to get another window over here. All right. So if we go to the KISS systems here on the website, let's go to the basket. And you see QQQs, it's still long, trades up 3%. Previous trade, it made 22%. So if we look at the Qs on the KISS tables, while it did hit the STS, remember the KISS, the non-high performance KISS systems on the website, price needs to close below the STS, not tag it, okay? So that's one of the differences between the higher performance and the not ones. But anyway, whatever. So let's go ahead and move on. So in case you ever wondered what those custom S&P daily and QQQ daily KISS system stats are for the website that we show in each of the newsletters, here's some stats I compiled. So here's the S&P 500 with buy and hold and the KISS system. Here's QQQ daily KISS and QQQ buy and hold. And again, not every year, but you can see overall the KISS systems beat buy and hold. So for example, $10,000 on the S&P started in 2003, turned into about 124,000. You can see the number of trades per year, average about 4.5 trades a year. That's very doable, even if you're retired. And that beat buy and hold, which the 10,000 only turned to about 44,000. You see that? This year, it would be up about 7.75%. Buy and holds up a little more, but again, it's not the end of the year yet. Not every year beats. You can see 2023, his system made 18.6%. Buy and hold made 10.6%. The biggest difference, guys, also is the drawdown. The max drawdown last year was only 2.8% on the KISS system. Max drawdown and buy and hold from the high is 20.84%. The average max drawdown on the KISS system, 2.6% versus 21.9% on buy and hold. That's, to me, that's the biggest deal, instead of just the higher performance total, is the lack of drawdown. I'm one who struggles with holding through big drawdowns. Maybe you're different than me. I just hate, I never want to go through a 20, 30% drawdown in a bear market, something like that. The KISS systems prevent that. That's the beauty of them. And bear markets, you could see here in the KISS system, made 7.3% in 2008. The buy and hold, you would have lost 38%. Big difference. Drawdown was only about 4% in 2008 versus almost 50% for buy and hold. What about 2022 was a bear market? So S&P was down about 32%. Actually, this looks like I got this number backwards, guys. But anyway, S&P was down, I think, 22%. The KISS system actually was slightly positive. And here's for the Qs, same deal, okay? Big difference. So that's what some of the stats look like on the S&P and daily KISS systems that we show in each newsletter each night. Next, here's some statistics for these higher performance systems. They're intraday. You can see SPY 78-minute. There's 5 bars and a 578 bar in a day, and versus buy and hold. And you can see $10,000 turned into about $250,000. It's up similar to what buy and hold is this year. But look at those drawdowns, very low compared to buy and hold, and about close to 3 times the performance overall. Here's SSO, a 30-minute chart. That's the leveraged. You can see here, only one down year, 2015. Last year, it would have made 55.5%, 32%. Here's the average, 38% a year. Pretty awesome. 2008, it would have made 19.7% in a bear market. 2022, it made 32% in a bear market versus, big down year on buy and hold, down 39%. XBI, that's the biotech ETF, no losing years, average annual gain of 27.6%. Here's buy and hold on XBI biotech, average annual gain 5.6%. What a contrast. Look at that. Almost 5 times more average annual gain. Look at your drawdown. 4.8% max average drawdown, 33% max average drawdown on buy and hold. You can see about 50% of the years are down on buy and hold. Quite the difference. Again, it's based on 130-minute. Here's IAU, that's gold. 78-minute versus buy and hold, just no comparison. So these will be coming with subscription, guys, which hopefully we're going to launch later this week. I'm going to offer 1 month and 6 month options, and I am going to give you a big coupon for the 6 month. Okay, so been a long time, and hopefully you guys look forward to that launch. Let's go ahead and move on. Let's get back to the general market newsletter. So item number 9 shows the index sector table, what transpired on Friday and, of course, for the week. Again, Friday, as I already stated, market had a big range day. It was down big in the first half a day, recovered, and you can see the day ended up bifurcated, but market came well off those lows, rallied strongly into the close for the end of the month. For the week, most of the indexes were down except for the Russell. But that said, with most of the indexes down, most of these sectors were up. Weakness in technology, semiconductor, industrials, biotech, healthcare, but everything else was up. Currencies, US dollar, it had flat for the week. Bitcoin was down, and it's down a little bit here this evening. Again, I think Bitcoin's going to go with the market, guys, so we want to watch that. Commodities here, the index DBC was down 1%, crude oil down about 1%, natural gas down 6.7%, copper down 3.2% for the week. Agriculture was up, corn, wheat were down. Precious metals were bifurcated. Gold was up 0.5%, silver up 0.2%, GDX up 0.3%. And as far as the bond market, the 10-year, 30-year ended up for the week. Next, item number 10 shows the economic news calendar, which I already discussed. We got a ton of economic news this week from PMI and ISM, ADP, initial jobless claims, non-farm job payroll reports, etc. All right, let's go and jump to these index charts. So first off, here's a monthly chart of the 5 key major indexes. You can see May ended up. The Dow was quite a bit off those highs, tagged its upper Bollinger Bands where it pulled off of. The S&P closed up nicely, as did the other indexes. They are up at nosebleed territories up here at the upper Bollinger Bands. Chart number 12, here's the daily chart of the major indexes. Like I said, a couple weeks ago, we were looking for about a 150-point pullback in the S&P, which we got, okay? And obviously, as of Friday's lows, and we rallied off the lows. The Dow's been the weakest lately, pulled all the way to its lower Bollinger Bands where it's bouncing. But the one thing I'm noting here on the S&P and NASDAQ, the Bollinger Bands are pinching. So that's means an important inflection point's coming up here. Next, chart number 13, here's the weekly KISS systems. These are also on the KISS system tables, guys. No changes here, obviously. Remember the weekly KISS systems have wider stops because they're weekly. They may hold trades for 1 or 2 years at times. So changes here. Next, chart number 14, here's the weekly chart of the Dow, down about 1%, quite a bit off those lows. But remember, over 2 weeks ago, I mentioned this divergent high, and I mentioned this MACD KISS stochastic short setup where the MACD was pinching under its signal line. At the same time, a stochastic got overbought. That gives you a low risk trade setup. Your trigger is taking out the low of the candle, which triggered the previous week with your initial stop at the highs. And that gave you a short. Now, if we'll see what it does. If the market's put in a low, then this is probably all you're going to get. But if that option 2 plays out that I discussed, then likely this will come down to this 37,000 area and retest that. Chart number 15, here's SDOW. That's would have been a way to play it. So again, here was your setup. You had the same setup with your MACD KISS stochastic, but oversold. Remember, since this is an inverse ETF, you triggered the previous week over that candle, right? And we followed through this week, but off the highs. So again, if you triggered on this, you would still be long technically. You would have your stop in place. Maybe you would take some off. Next, chart number 16, here's the S&P 500 monthly chart. Again, just showing you the bigger picture here, guys. We've been in this uptrend channel, since 2009. And, if the market were to really rally, maybe the upper channel is a target over time. This is a pretty good overall system, this 14 stochastic on a monthly, this 50% area, as you can see, pretty good guide. Chart number 17, here is another monthly chart of the S&P. This area here is a demand zone. So if we do get that option B where we pull back again, this would be a big support area to watch. Chart number 18, here's the weekly view of the S&P, marched down about 0.5%. You also had the same setup here with the MACD KISS stochastic overbought. This triggered technically last week below this doji, but price came back. Okay, so you would technically be slightly underwater if you took that trigger. Your stop again is defined; it'd be right at the highs. So we'll see. Is the low in? You can see we bounced off the 9 EMA, or do we get that option B where we get that sell off maybe down to the 5,000 area? Next, chart number 19. Here's the Inverse ETF, the same setup. Like I said, it triggered technically. If you were following this setup, you would still be long with your stop 1 penny below that 24.32 area. The first target area would be this supply zone right here, and the next supply zone would be up here. So those would be your targets. If the market decides to sell off, these would be your initial profit areas. Next. Moving down to the lower time frames, here's the daily S&P 500 chart. So you see on Friday, we came down to that demand zone in the morning, right? We bounced right off of it. Again, these supply and demand zones are really powerful, guys. Really love these things. I've been doing this all year. Rallied up, and now we're into this supply zone. So we'll see if we can push up through here, or do we stall here and that a more bearish option plays out. Next. Chart number 21. Here's the daily S&P, just a nice clean chart with the moving average ribbon. It's always a very good guide. And it's pinching here. So, under a bullish scenario, that would be quite bullish. Again, this is the option I discussed early on where we completed a wave 4, and we're now starting a wave 5 up to a new high. Okay, the moving average ribbon pinch would support that. But again, we'll see, guys. See which one plays. Again, if you're long, just put a stop at Friday's lows. Pretty simple, okay? Because price has no business going all the way back to there if this wave 4 is in. Next. Chart number 22, here's the other option number 2, the more bearish option. So we pulled all the way down to this demand zone, which we had in place. Remember, on our website, on our trading community, we had this drawn ahead of time, this demand zone, which we came into. And that would have been a very low risk area for you to buy on Friday for a heck of a trade, because the market had a big rally the last half a day on Friday, as you know, of 40 points alone that last hour. So we bounced off the demand zone, retraced almost 61.8% from the highs. This option here, so you got your supply zone up here and your 78.6 fib. If we're going to form a lower high, it's going to be right around in here, guys. So we should know early this week, okay? If we close above these areas, like especially above the supply zone, above the 78.6, then the more bullish option is in place that wave 4 is in, okay? But this is an area to watch for, guys. Really pay attention this week. If we stall here and come down, this would be our target area down here, okay? Next. Chart number 23, here's another 60-minute chart I was showing all last week, where we had that wave 5 of 3, and then that pullback is a wave 4. And again, under this count, you have a nested 1, 2, 1, 2. So that would have been 3, 4, and you'd be going up to 5 and a new high. You can see your RSI trigger that triggered on Friday, the RSI trendline break. So again, if you're long, easy stop right there at Friday's lows. You could honestly, you could have it tighter than that, probably even around this 52.40 area. But if price, it ends up being a bull trap, and this is not a wave 4, this supply area is likely an area where we may fail. So be on your toes here Monday, Tuesday. Next, chart number 24, here's a 30-minute chart of the S&P, just a clean example of the supply and demand zones. First off, these open gaps, remember, they tend to be magnets. We filled those 2 up here. You can see Friday we rallied off the demand zone just perfectly. And there's a supply zone right here. Okay, so let's see if we stall here or we can break through it. Okay, but this is an important area. Should the market come down again, you can see you got a big old open gap down here, which would be a target. Next. Chart number 25, here's a 2-hour chart. Again, you can see the supply zone up just above. And so we'll see what happens early this week. Next, chart number 26, here's the 4 time frames with our indicators. So on the daily S&P, remember, a week and a half ago, we had the Mark 913 combo and the resistance cycle where price pulled right back from. We did bounce near the ATR. We lost the ATR and all the other time frames, as you can see, which is now resistance. Well, we did break above it on the 78-minute. But the 195-minute, 130-minute were right near the ATRs. Those are resistance. On the 78-minute, you can see how oversold we were into Friday with the Mark 913 combo, and then we had that big rally on Friday. Chart number 27, here's a chart. This shows you the SPY versus the equal weighted S&P. Also, a week and a half ago, just wanted to show this. This is a good thing to watch. These two tend to move together, but you can see how you had a divergence. You had a lower high on the equal weighted versus a higher high on the S&P, and that was a little early warning. Next. Chart number 28, here's the 4 time frames on the Qs. This got out of order for me, but we'll go ahead and cover it here. So similar on the Qs daily, we fell below the ATR on Friday, recovered it. We're below the ATR on the half day, which is resistance, and the 130 minute. You can see we bounced off that support cycle on Friday. And on the 78 minute, just like in the S&P, we had a mark 13 where we bounced on Friday. We're not above the ATR on the Qs. Next. Chart number 29, here's the Qs daily. Again, just similar look to the S&P. We either completed a wave 4 at Friday's lows, and we're going to go to new all-time highs, or we're going to form a lower high, kind of like I showed in the S&P. Again, for the bulls, we held that 50-day. We have the moving average ribbon pinching here, but we'll see. We'll see what the market does earlier this week. By the way, I refreshed this, the percentage that these stocks represent. You can see the 10 stocks here represent about almost 50% of the Qs. That's the problem with some of these indexes, guys. A handful of stocks dominate what these indexes do. Next, chart number 30, here's a weekly view of the KISS, and this is something to really keep an eye on, guys. This is a weekly chart, but you have a very obvious rising wedge here, and you have 5 waves. Now, I'm not saying we make a major top right here. Remember, this is a weekly chart. This could still oscillate in this wedge for another month or two. But along with that divergence on the MACD, this is something that could play out for a nice correction this fall, perhaps. Something to keep an eye on over time. Next, chart number 31, here's the half-day chart. We had that little steep wedge, over a week ago. Nice pullback. We did bounce off this 50 MA here. Should we go down again, though, and form a lower high, there's an unfilled gap down here that could be a target over time. Chart number 32, here's a half-day chart. You can see crazy action. The big sell-off the first half a day, big bullish candle on the last half a day, essentially an inside to that previous candle. And chart number 33, here's the 60-minute chart. So again, we rallied off the demand zone on Friday, and you got a supply zone up in here. So the bulls need to get priced above this supply zone. Otherwise, we could form a lower high here, then come down again, maybe fill the gap down here. So onus is on the bulls to continue. Chart number 34, here's IWM small caps. And they're just kind of oscillating around here between supply and demand zones. Chart number 35, here's the 6 to 2 hour view. Here, again, it just kind of has a little head and shoulder look to it, but obviously to play out, it would need to break this neckline. All right, that does it for those. Let's go ahead and move on, look at some indicators. So chart number 36, here's the VIX. This is the VIX VVIX ratio here. Below that, we have the VIX itself to the Bollinger Band. You can see the VIX stalled at that upper Bollinger Bands last week, and the VVIX. And this played out, guys. One thing I've noticed here, you can see my comments, when you have a VVIX to VIX ratio, whenever it's outside its Bollinger Bands, upper Bollinger Bands or lower Bollinger Bands, tends to occur near market inflections. You can see like here, that occurred near that market low in April. And this was outside its upper Bollinger Bands about 2 weeks ago. That gave you an early warning that the market would pull back, which it did. So you can see how it was back here in October of last year, that major low, how it was below the lower Bollinger Bands. So this is a good chart to keep an eye on in the future. Chart number 37, here's the VIX. As you know, the VIX. By the way, remember guys, 2 weeks ago, when the VIX was down here, I pointed out this divergence on the RSI, and I said we needed to see a rally to see the lower Bollinger Bands start to curl up. You can see my comments here. Not possible for the VIX to tag its lower Bollinger Bands without a bounce in the VIX to raise the lower Bollinger Bands back up. Well, we got the bouncing the VIX, and you can see the lower Bollinger Bands are now flattened out. So that played out, like I said. Chart 38, here's another clean view of the VIX. You can see how it rallied up from that wedge into a supply zone where it stalled. And chart 39, here's the VIX on the 2-hour time frame. I was pointing out this open gap, which was a magnet, and it indeed was, which was filled late last week before dumping. Those gaps love to be filled on the VIX. Chart 40, here's the VIX with the SVXY with the S&P. That's the inverse VIX, by the way. They tend to move together. Chart 41, here's the S&P versus the S&P equal weighted. Here's another interesting chart, guys. So again, I already showed this before, how the equal weighted made a lower high, right, to the S&P higher high. But also, guys, whenever this correlation indicator, you can see when you get this uncorrelation, when it spikes below 0, look how that occurs near market inflections. That occurred near that market high over a week ago. This one here in April occurred right at that market low. That one in January occurred at that little pullback low. The one there in July of last year occurred right at that market high. So this is also a very useful chart to watch for these uncorrelation events that occur. Guys, the beauty of being a subscriber to Breakpoint Trades instead of just YouTube, we provide you the live chart URLs to these so you can save them on your own and look at them instead of just a static image here. That's the beauty of adding a subscription to our website, breakpointtrades.com. Chart 42, here's the NYA with this indicator down here. It did get oversold as of Friday where we're bounced, and you can see when this gets oversold, it's going to bounce. Some others, chart 43, here's the NYSI 9EMA crossover system. Now, this has been a pretty good system with the confirmations. Got a nice buy confirmation there in early May, had a sell confirmation there in April. This did go on a sell confirmation last week, and it hasn't went back on a buy yet. So this is still on a sell. Next, chart 44, here's high yield corporate. Now, high yield corporate bonds, here's a positive for the market. This pulled back to its 50-day moving average and is bouncing, and the market tends to follow this, so this could be more supporting that wave 4 bullish scenario. Chart 45, here's TLT 20-year bonds, still in the downtrend channel. So far we get a little higher low. Now we'll see what it does up here at the channel line and these moving averages. That's a break point, like our website. Chart 46, here's the 10-year treasury yield on the daily. Still in this channel. Again, let's see what it does here coming this week. Chart 47, here's the bigger picture chart of the 10-year going back to 1980. Remember, 10-year treasury yields, interest rates were in a secular bear market for the last 40 years. It finally broke this 35-year channel line in 2022. Guys, essentially, the secular bear market in the 10 and 30-year yield is over, okay? Anyway, you can see the oscillation. The 10-year did find resistance around that 5% earlier, or last year. So, but long-term, guys, rates, the new normal is up for the long term. Next, chart 48, here's the yield curve. So it's still only at 0.92. By the way, on May 13th, this was inverted for 678 days. So, you know, it's getting close to 700 days now. This, I think, is still eventually going to produce a recession. Usually when this goes back positive is when you get your recession. We've been seeing signs of slowdown in the economy, unemployment ticking up. Let's look at unemployment. Here's unemployment rate, okay, monthly unemployment rate. And a very simple concept, guys, here, but I added a 5 and 13 EMA, moving averages, to the unemployment chart. And overall, these are really good guys whenever the 5 crosses the 13. Notice on the unemployment rate, it tends to really trend well, kind of like a barge, right? When it trends, it tends to then go for a while, right? Trends up, goes for a while, trends down, goes for a while, etc. Notice it's curled up here, and the 5 EMA has crossed over the 13. So is this now going to start an uptrend in the unemployment rate? So this could be showing early signs pre-recession, okay, of the employment rate starting a new uptrend. Okay, let's go ahead and move on, review a few of these market sectors, get through this quickly. Here's XLK Technology. Again, nice pullback. You can see it bounced right off its 50-day moving average on Friday. It's an important area. Chart 51, XLC Communications sector contains a lot of these FANG stocks. Honestly, this is still extremely strong. Look at this, trying to break out again. Chart 52, semiconductors pulled back, bounced off their 20-day moving average on Friday, recovered there. Chart 53, transports kind of had a head and shoulder look. Remember, they've been underperforming since March. They broke that neckline 200-day moving average and recovered that 200-day moving average on Friday. Chart 54, industrials. We had that double top, as you know, a couple weeks ago. Now they did bounce off a demand zone for now, back in the moving averages, which is some resistance. Chart 55, biotech, just chopping around here. And I already showed you guys the biotech KISS high performance has awesome stats. Something I'll be trading. Chart 56, home builders, coiling here, something to watch. Chart 57, utilities, after a three-wave pullback to the 20-day moving average, rallying again. Now this next high here is likely to sub some active divergence. Chart 58, materials in a nice coil, tight coil forming. Chart 59, financials, bounced off of support into the 20-day moving average. Chart 60, XLE Energy, nice bounce here. It's still in the channel, but yet a nice trigger here. ExxonMobil and Chevron are the two biggest components. Chart 80 or 61, oil services, again, still holding this little demand zone. By the way, energy stocks have been stronger than the commodity, so take note. Energy stocks tend to lead. Here's the bigger picture of oil services, OIH. We have this long uptrend from 2020. There's a big thin zone up in this green area, which if price gets into there eventually, I think it'll melt up, but it's still quite a ways away. Next. Chart 63. Here's yen. That's the not Japanese. That's the Chinese ETF. It's the leveraged play. This had a perfect pullback off that supply zone, which I had drawn well in place ahead of time. It's pulled all the way to the top of this demand zone. This could be a low risk area to attempt along. You know, you have the 50 and 200-day moving averages right here. Next, moving on to commodities, chart 64, DBC, that's the index, down 0.3% for the month. You can see this big month, this 2-year coil that's forming. Moving average is pinching, so a bigger move is coming in this eventually. Chart 65, there's the weekly. You can see stalling at the top of this coil for now. Chart 66, here's the daily, breaking those moving averages in that tight little coil there. Chart 67, crude oil continues to weaken, stalled at its 200-day moving average. Now, like I commented, the stocks are stronger, so we'll see which one ends up winning out. Chart 68, here's the tradable ETF USO. Got a demand zone down here to monitor as potential support. Chart 69, UNG natural gas ETF. This trade played out beautifully from this falling wedge we showed. Rallied all the way to the 200-day moving average. Hope you took your profits there, but it's a nice pullback since. Chart 70, copper, down 3.2% for the week. Again, it was quite extended, not surprised. See a pullback the last couple weeks. Here's the daily chart. There's a supplies or demand zone here, guys, potential support. Right around also this 50-day moving average could be an area where it finds support. Chart 72, here's DBA. Rallied nicely off that demand zone, got a little extended, pulling back some. Chart 73, Bitcoin. This is a 4-hour chart. Again, it's coiling here, so energy is building. This is likely to break this week sometime. Chart 74, here's Ethereum. Broke out of that wedge nicely, consolidated at the moment. And one of our trade ideas we had on our website, ETHE, Ethereum Grayscale. Hell of a move from that tight coil. Look at that. big percentage move from 22 to 36. Moving on, chart 76, US dollar, essentially flat for the week. Again, important supports the subtrend line, supply zone up there where we stalled last time. Chart 77, gold. Now, gold is interesting here, guys. We have a potential fifth wave high there, okay? And gold's a little weaker here. Right now, this 50-day moving average is critical support. You're moving, keep an eye on your ratio here of gold to the stock. Still holding the trend line for now. But that last high did have a pretty obvious MACD and RSI divergence. If we lose the 50-day, you first have a little supply zone here, but your bigger supply zone's down in here, which I think could be a target if we lose that support. Chart 78, here's the weekly chart. Again, up about 0.5%, still holding the 9-week EMA. Remember, we broke out from the bigger pattern earlier this year. Chart 79, gold on the monthly, up 1.9% for the month. Again, long-term, guys, gold broke out of a major pattern here. I do think eventually over time it could go up to the 3,000 area, kind of in this wave 3, 4, 5. Chart 80, here's silver. Pulling back here on Friday, especially down 3.5%, losing that 9 EMA. So you got the 20-day down here. First support demand zone is down in here near the 50-day. Chart 81, there's the weekly view. Again, perfect triangle that it broke out from earlier this year. Heck of a move. Chart 82, there's the monthly view of silver, which is up 14% still for the month. You can see pulling off this supply zone here initially, right? But broke out of a 4-year coil. I do eventually think it's going to go up into these areas. Here's the bigger picture view, chart 83, monthly view, going back to the 70s. Notice that $50 area has been big time long-term resistance. You had the Hunt brothers cornering the market back in 1980. And of course, 2011, we hit the same area. You can see we broke out of the coil. We pulling back off the supply zone. Longer term, though, I think we're eventually going to hit this area again and break it, guys. I think we'll see silver over $50 eventually. Think about that. Chart 84, here's GDX weekly, slightly up for the week. Remember, it's stalling at this supply zone a little bit. Chart 85, here's the daily. Again, kind of similar to gold here. You got a potential MACD divergent high here. Got a potential lower high. So if we lose this, I think we're going to move down at least to the 50-day. Chart 86, here's the 2-hour view. Kind of watching this ratio trend line and this little support. You kind of have a little head and shoulder look if this starts to weaken. Here's a way to play a pullback would be dust the ETF. We get that. Chart 88, here's the BPGDM system. Remember, I've been pointing this out. It's up near 90% now. Your low risk buy in this thing is when it's down here. It gave a buy signal on March 1st. Right now, you have a MACD divergence. So these stocks are in nosebleed territory at the moment. Chart 89, GDXJ, another ETF. That's the gold miner juniors. You can see it stalled at that supply zone last week. And chart 90, pause. It's a silver stock. You can see rallied all the way to the supply zone. Now, again, longer term, guys, these areas I think are going much higher, but this could be an area to pause and pull back from. Finally, looking at a few other things. Here's NVIDIA. Remember, NVIDIA is moving up in market cap. Eventually, it's probably going to take over Apple. NVIDIA cannot hold up everything. Pulling back here a little bit. First support's the 9 EMA. So we'll see if it holds that or not. Some other things, chart 92, American Airlines, dumped on earnings. Boy, this chart is ugly. Look at this thing, sell-off since 2018. A few others, chart 93, Irene was a long idea of ours back in mid-May. Heck of a move, still looks okay, honestly. Chart 94, CNQ, it's a natural gas play, I think. Coiling here, one to watch. Chart 95, CAL was a short from last week, which is now starting to play out. Maybe target would be around the 200-day moving average here. You got a little demand zone there. Chart 96, FUTU weekly chart. This is a long idea I put out back in April on this weekly nice base coil break. Had an initial move up here. Long term, maybe it makes it up to the supply zone, but it's going to take time, guys. It's a weekly chart. Jarbor 97, CXW was a new long I put out last Thursday, or last Wednesday, which moved up nicely. Still looks decent. Jarbor 98, CNA was another one I put out last Thursday. Actually triggered on Friday, as you can see here, for a long. Oh, and the final chart, this one got out of order. This I meant to have by gold. So this is the inverse ETF for gold ultra short. So if gold loses that 50-day moving average, this could be a way to play a pullback in gold. Target would be this supply zone up here. All right, guys, have a wonderful rest of your Sunday. Let me do a quick check on futures here since the futures market is open. All right, sorry about this, guys. Taking a little longer than I wanted to. ES futures are up 5 points. MNQ futures are down 9. So we'll see how things fare tonight. Again, have a wonderful evening, and thank you for all your support on YouTube. Please like, subscribe, comment. That really helps me out. And if you're not a subscriber to Breakpoint Trades, please try us out. And if you need some help, please write into support. I'm willing to take a phone call, Zoom meeting, whatever. All right, have a good rest of your evening. Take care.